Hi everyone, let's go through my macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my preferred bullish scenario on the macro, where we're looking for another move towards the upside in a wave 5, where the most common target for wave 5 is between 98k and 174k after the low of this wave 4 is in, which was made right on top of the 0.5 Fibonacci, which is the maximum target for wave 4, taken from the low of 2 to the high of 3. And as additional confluence, the exact week low was also made on the 0.618 Fib time, also taken from the low of 2 to the high of 3, and we had a volume peak at the lows of this wave 4, which can signal a potential reversal area, just like it did with the low of wave 2 over here. High amount of volume for then a reversal towards the upside. If we then go to the macro bearish scenario, which is an alternative to me, we have been looking for a 5-wave structure to the upside and then a 3-wave move to the downside. In this particular scenario, the reason it is an alternative is that this wave 4 is relatively short in time compared to this wave 2. So usually a wave 4 is shallow and longer in time compared to wave 2. But clearly this wave 4 over here is shorter in time, which is not really something you like to see. And that's the main reason it's an alternative for me at the moment. Now, if we then look at this wave A, B, C to the downside, a zigzag structure, currently inside wave B, where we again are looking for a 5-wave move to the upside, where the most common target for then this wave B and wave C with a great amount of confluence is between the golden pocket and the 786. And it is such a great area of confluence because the golden pocket, the 618, is in confluence with the point of control at around 40k of this big yearly range over here, and the 786 is in confluence with the value area high of this range around 50k. So the main area of resistance is between 40 and 50k, just above where price is now. Now the low of wave B might already be in, or price could dip a little bit deeper for then the low of wave B, but you eventually expect a 5-wave move to the upside to finish B, for then in this big resistance area a move towards the downside for C. If we then look towards the downside, after then B is in and this invalidation will be removed because the high of B is in, we're looking for wave C, where currently the 1-to-1 and the 1.236, the most common target area for wave C, is in perfect confluence with the golden pocket taken from the low to the all-time high, as well as the value area high over here of this volume profile, multi-year volume profile, so that's massive support. In confluence with the golden pocket and the common target area for wave C makes it a very, very important support area for Bitcoin between 11.5k and 8k. Now, of course, wave B is not yet in, so I currently estimated the high of wave B to be made around the 786 area, which then gives the most common target area for wave C being around this golden pocket and the blue line, the value area high at 9.7k. So we know very important resistance above price, and we also know where the very important support is, just below price. If we then go to the daily time frame, you will see that for the first time in my high time frame videos, I'm going to be sharing logarithmic charts and linear charts. And there's a big reason I do that, which you will see in a moment. So on the log chart, which we are right now, you can see that we're looking for a wave 1, 2, 1, 2. This is a very bullish scenario, right? Where it's a 1, 2, 1, 2. The end of wave 2 is in, and you're looking for a big wave 3 now towards the upside, where you want to see volume following price towards the upside. That's exactly what you're looking for. Now, as you see at the moment, if this is the beginning of a wave 3, volume wise, it's yes, we do have an increased volume over here in this move to the upside, but it's not yet that confident, right? If you look at the volume over here, or even the volume over here, the volume over here was higher than what we got at the moment. However, this can still only be another wave 1, for then a wave 2, and then a bigger 3 to the upside, and then you really want to see volume pick up. Now, in this particular scenario, which is an alternative scenario to me, this wave 2 just missed out on hitting the common target for a wave 2 on the logarithmic chart, which is the 0.5 to the 0.786. These fibs are common targets for a wave 2 pulled from the low over here to the high of wave 1. It did hit the 382, but the 382 is a rare target for a wave 2. But the main reason that for me this is an alternative as it stands is because this wave 2 over here is very, very long in time compared to a much shorter, higher degree wave 2, because the blue count on the chart is a lower degree count compared to the green one. So the green count is a 1, 2, 3, 4, 5, and then inside wave 3, A, we have the blue count being a 1, 2, 3, 4, 5, and the lower degree counts usually are shorter in time than the higher degree counts, meaning that the wave 1 of a lower degree usually takes less time to form than the higher time frame wave 1, and the wave 2 on a lower degree, which is the blue count, usually takes less time to form than the higher degree wave 2. Now this wave 2 was already incredibly short, but this blue wave 2 is much longer in time compared to the green wave 2, which makes it an alternative scenario for me. Now the invalidation in this scenario is price continuing moving to the downside and hitting over here the lows at 19.5k. If we then go to the logarithmic chart, then you will see price has hit the 0.5. Now it didn't really respect it that nicely, right? Like we had maybe a bit of a bounce. I mean, it just missed out on hitting it with these couple of wicks, and over here on the daily time frame we closed candles below, then eventually backtesting and lifting off. But it is important to know that the 0.5 has been hit on the linear chart for then potentially that continuation to the upside, because again the 0.5 is a common target for a wave 2, but it is an alternative scenario for me because this wave 2 is so long in time compared to the higher degree wave 2 that we have. If we then switch back to the logarithmic chart and we go to my preferred scenario, then in this scenario, and this is interesting because actually both the linear and logarithmic chart of this scenario is completely different and gives a completely different scenario, because in this scenario you will see, or you can see, that the low over here did not hit the 0.382, and that is important because for a wave B or a wave 2, the 382 is a minimum target. For wave B, the 382 is a common target. For wave 2, the 382 is a rare target. But in the logarithmic scenario over here, price missed out on hitting this area, and the target area, the 382 to the 0.5, is starting between 23.8k and the 0.5 then is at 21.9k, where inside this area you have this target box, the blue box, as you can see, between 21.9k and 22.6k. And I don't really like it that price didn't touch the 382 on the logarithmic chart. I prefer to see on the logarithmic chart price moving to the downside and hitting this area, but it moved to the upside as in an impulsive structure, which, as you have seen in my update earlier today, this can still be a wave C for then continuation to the downside in a wave Y, right? We have to observe what's gonna happen locally, and then we know the probabilities of that move happening. But in this particular scenario, we then have this as a wave 1 or a wave A, a 5-wave structure over here, where then we're looking for a 3-wave structure to the downside, which is not yet finished. So in this scenario, we're looking for a move to the downside where the low will be made likely between the 0.618 and the 1-to-1 of this move towards the upside. That's a fib time, and that is a common target area for fib times. Now the minimum end for me for a wave 2 or B is after the 0.382, which has happened, but the main problem is we didn't hit this area on the logarithmic chart. So on the logarithmic chart, this correction is not yet over. While on the linear chart, one can argue that the correction is over and more upside might be on the cards. So in this scenario, we again have the same move to the upside in a wave 1 or a wave A, but then as you can see right now, wave 2 or wave B has hit and respected the 382 perfectly. Now the 382 and the color B is purple because the 382 is a common target for B and a rare target for a wave 2. So for a wave 2 preferably, you would like to see price move to the downside and hit at least the 0.5 also on the linear chart at 23.2k, but that didn't happen. It bounced on the 382. Now it is still a target for a wave 2. It is a rare target, but a target nonetheless. And also these fibs, by the way, are taken from the low at 15.4k to the high that we have locally at 31k. So in this scenario, the low has been made after the 382 on top of the 382 over here, Fibonacci, for then potentially this to be a wave 1. Then we have eventually a 2, and then you're looking for more upside in a wave 3, where if we then look at time and we look at a wave 1, 2, 3, 4, 5 or an A, B, C, we get different targets as well. Now you see a fib time in purple, which is a fib time taken from the low at 15.4k to the high of this wave A to then the low of this wave B. And usually a wave C takes a little bit more time to form than a wave A. So preferably we want to see wave C finish somewhere around this 1-to-1, maybe a little bit after the 1-to-1. And the 1-to-1 is sitting at the 6th of November this year. Now, you will also see that the target area for wave C between the 1 and the 1.236 taken again from the low, the low at 15.4K to the high of wave 8 to then the low of wave B with the trend-based fib extension tool is between 40K and 44K. And do we know what is at 40K? Yes, we do, because on the macro, the 40K level is a resistance area on the logarithmic chart, that is, with the 618 and the golden pocket, right? So the 40K is a very important resistance area for price. However, if price continues more impulsively and we're not even, like, we're going to move up like this, for example, not even close to the 1-to-1, it is more likely we're in then a wave 3, where a minimum target for wave 3 is, there you go, 50K. What's at 50K? It's the 786 with the value area high on the macro time frame. So very important resistance over here, very important resistance over here. So that's how the macro time frame and these high time frame scenarios are playing hand to hand, right? They go hand in hand. So that is very, very interesting indeed. Now, if I have to give a preferred scenario, then I prefer the bullish scenario on the macro time frame. As I mentioned, I prefer this scenario, basically like this scenario with a wave 1 or wave A, then a 2B, and then a 3 or C to the upside compared to this particular scenario. So this is an alternative to me. But between these two, like the logarithmic one or the linear one, it's difficult to say. As mentioned, I prefer to see on the logarithmic chart price also hitting this area, and I think it would be an amazing fake out of people longing in a wave C and potentially an A, B, C, and then price still moving to the downside, creating a new low, creating a lot of fear, stopping everyone out, and then move up. How amazing would that be? But then again, with the daily updates that I'm providing you every single day, we will see and observe what's happening locally, and based on the scenarios we have locally on the lower time frames, we can give probabilities to up or downside, and eventually trading is all about probabilities and trading your plan. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.